All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Let's go out and get to it. Jobs Friday here today. We have some other things going on with the coronavirus and some weaker than expected data in Europe overnight, and market opening up and selling off, and down about 20 points at its lows. Has bounced off of those here a little bit. But let's start with the challenge. Procter & Gamble, JP Morgan, current prices. We have small gains on each of them. Nothing to write home about there. Both stocks still in a good position. Still from a chart standpoint, still in a pretty nice spot, here. And I wouldn't be too surprised to see both of them go green here today. But we'll kind of see how it plays on out. But nothing where the price action is alarming in any way on them this morning. So we'll continue to hold. We do hit the time stops here this afternoon if the trades are red. So if we were to hit this afternoon with where things are now, I would hold them over the weekend since both options are in the green here. So we'll see how that plays on out. So that's the challenge. No new signals here this morning, though we do have some crossovers. Here are the downside crossovers. Caterpillar, Dollar General, Halliburton, Honeywell, Nike, Under Armour, Vale, U.S. Steel. You'll notice probably every one of these has had an upside crossover here this week that didn't trigger bullish. Under Armour seems to be, on and off this list every single day, but the consolidation risk just continues to be very high. Now, the one exception is gold, and GOLD. This is one where I thought, there was a chance we could see it trigger. Yesterday didn't quite trigger here. I talked about it. I did go and put on a personal position here. It opened a little higher, has been weakening here since. So no challenge trigger here for it as of yet. We'll see how that plays on out, but that could be a signal here by this afternoon. But a lot of things like a Caterpillar, which had nice bounces this week, and they're just kind of retracing some of that bounce, which is not entirely uncommon to see here. But so far a lot of these, the bounce is holding up pretty well. We're not seeing that panic sell come in, at least as of yet, right? At least as of yet. Obviously, that could change. Then on the upside list, Juniper and Verizon here. Now, Verizon has reported earnings. They dipped all the way down almost to the 200-day moving average. Have had a really nice bounce back this week after getting crushed on Monday. But won't be a signal even on the crossover. And then Juniper, which is very interesting from a chart perspective and from a challenge perspective, as far as the potential to trigger. It is coming off of this low that it set after earnings, but the last 2 days has kind of created a little bit of a higher low. So we could see a signal come in on Juniper today, and that might be a nice and tradable one, at least to fill the gap here. The challenge, we'd be looking at about $1 rally, which would be a gap filler, basically. So interesting setup, interesting chart, and we'll see how it pans out here this afternoon. The number of tradable stocks on the watch list continues to grow as earnings have come and gone for many of the names. Now, the big news out there this morning is the jobs report. And, let me kind of just set the stage here a little bit with a 15-minute chart. And you can kind of see the rally that, the market has experienced here this week. And then yesterday was a pretty flat day. So the rally, started, Sunday night, basically. Rally Monday, rally Tuesday, rally Wednesday. Then Thursday, very flat. Overnight, a little bit of dip. But you can see what this dip looks like relative to the rally. It is a very shallow, very flat dip, in comparison, and one where we're not seeing big aggressive downside volumes come on in. Well, what's catalyzing it? Well, a number of things. Let's zoom in here to a 5-minute chart and just look at overnight. right? And overnight, you can see S&P futures were higher. They ticked a little higher. They weakened, right after the bell, and then ticked higher just before Europe was about to open, and then they drifted on lower during the European session. We saw some numbers out of Germany in regards to manufacturing, and the numbers were softer than expected and showed contraction. But the thing about those numbers is they were December data. It wasn't January data, and we've already seen, January data. So this is one of those cases where we're getting old data, new reports on old data. And that's what we saw last night, but was enough to catalyze some selling. Then a little bit of rebound ahead of the U.S. jobs report, and the jobs report comes out, and the initial reaction's higher as the number beat expectations. And then, we saw the revised number for last month, just took things down just a little bit. And then it's just, boom, we saw that harder sell come in. And then, since the market is open, we've seen it dip into some new lows and, currently trying to stage a little bit of a rally. So market down about 10 points here. Small caps lagging. They're almost down 1%. So small caps definitely lagging out there. If you look at my list over here of the green versus red, a lot more red on the board than green. Some of the green is, in that tech area. Where we tend to always see it, but if we come to the number of advancers versus decliners out there in the market today, it's pretty red. For a 10-point dip, that is pretty darn red here as far as the advancers versus decliners go. So long way to go. It's not uncommon to have a big jobs report reversal, but we talked about earlier this week that the economic data is going to matter for investors. And yes, the jobs report today is going to create a whipsaw reaction and all of that. But when fund managers and investors go this weekend to look at the economic data, to look at their models, what are they going to see? Well, here's what the jobs report looks like, right? And I'm just going to compare it to the last 5 years. And here's the number. It's right here. Okay, this is the number. This number over the last, 8 months? It is the highest number except for 2 months. November was higher, and I believe this is November of last year as well. So, within the last year, this is the highest number outside of November, which tends to be a higher number just simply because of all the temporary hires and everything else. So, this is a very strong number relative to what things have been. And it does confirm that we're seeing a pickup on an accelerated rate out there, economically. And that is something that, if you're looking at the jobs reaction, you go, oh, well, it must be a negative, blah, blah. And no, it is not in terms of jobs creation. Now, the unemployment rate ticked up by 0.1%. Does that matter? For me, we haven't seen the market really react, to the unemployment rate for a while. But let's see, I didn't get the right one there. That's the employment rate. Let's see here, unemployment rate. There we go. But we haven't seen the market react to this for a while. And it's not exactly like it has ticked up in any sort of major way, right? And the unemployment rate just continues to fall here in the U.S., and there's a lot of talk about it and how it's measured, and it doesn't measure accurately and all of that. And I'm not going to get into all of that, but the bottom line is, fund managers aren't going to look at this and go, wow, that's something that need to be concerned about. And so it is one of those things where overall, solid number. Was it as good as the API number that we saw on the ADP, not API, my apologies. The ADP number that we saw on Friday? No. But here's the ADP number that we saw on Wednesday. Yeah, the highest number we've seen in 4 years, right? It was a massive number. So when we look at what the story of employment is, here, and what we've seen from the ADP and from the government data, it is showing acceleration and increase in the jobs market here in the U.S. and that is a net positive, going forward here, regardless of how the market reacts here today and all the other variables that are in it. Because let's face it, coronavirus stuff is still real. It's still happening. There are still people dying. There's still new cases, and some of the stuff out there is frankly a little scary. It's a little scary, but at the same time, there's some hope for it, but markets have kind of backburnered it just a bit, but it is definitely not out of the market's mind as things as things sit. So that's what we're seeing here today, and overall very kind of mild reaction. Here, two things so far. We'll see kind of how things close, and and go from there. But I continue to hold on to Procter and Gamble and J.P. Morgan, and we'll assess those this afternoon as they do come up on their time stops. And if they are green, we'll hold them, and if they tick down a little bit more, we'll need to exit there, with them. All right. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you this afternoon. Take care.